Hey everyone, welcome back to the deep dive. We've got the Samsara Q1 fiscal 26 materials here, the earnings release, investor slides, shareholder letter.
Yep, all laid out. We're digging into their results for the quarter that ended May 3rd, 2025.
So our goal today is really to unpack all this, pull out the most important stuff, maybe find some surprising details about how Samsara is actually doing.
And, where they're focusing in this whole connected operations space.
Exactly. Just a quick reminder for everyone, Samsara, they connect physical operations, think vehicles, equipment, all that stuff to the cloud.
Right, using their platform and increasingly AI to help companies with safety, efficiency, sustainability. It's a huge part of the economy they're tackling.
Okay, so let's jump right in. The headline numbers for Q1 fiscal 26. What's the big picture?
Looks like a strong start, honestly. Total revenue is $366.9 million.
$366.9 million, and that's up quite a bit, right? Like 31% year over year?
Yeah, 31% or 32% if you look at constant currency, so adjusting for, exchange rates. Solid growth either way. Okay, and what about ARR, annual recurring revenue?
That also looks good. Ending ARR hit $1.535 billion,
Wow.
also up 31% year over year. Same in constant currency, 31%.
The CEO, Sanjeet Biswas, he called it a strong first quarter. He seemed to really emphasize, especially with the uncertain economy,
Right.
that their platform helps customers get more from their existing labor, resources, assets, and delivers a, quote, clear and fast ROI.
That ROI piece feels crucial right now. And just for context, looking back a year, Q1 FY25 revenue was $280.7 million. ARR was $1.176 billion.
So yeah, you can really see that growth curve continuing. It's not just one good quarter.
Definitely sustained momentum.
Okay, impressive numbers. So what's driving that top-line performance according to the materials?
Well, a huge theme, maybe the core theme, is their focus on larger customers, big enterprise deals.
Okay.
They even mentioned they updated how they define a customer to reflect this better.
Yeah.
Affiliated entities under one parent, now counted as one customer.
Oh, interesting. So aligning the metric with how they actually sell to big companies, did that change the numbers much?
They said it had a minimal impact, but it really signals that strategic shift towards enterprise.
And how's that showing up in practice? Are they landing more big fish?
Yeah, the numbers look good there. They now have 2,638 customers with ARR over $100,000.
Okay, and how does that compare?
That's up 35% year over year. But maybe more telling is how many they added in the quarter.
Right.
They added 154 of these $100K plus customers in Q1 FY26. Compare that to 105 in Q1 of last year.
So the pace of adding large customers is accelerating. That suggests the enterprise sales motion is really working.
Exactly.
Yeah.
And the average size of those deals is holding steady, maybe ticking up slightly.
Hmm.
Average ARR for those big customers is now 338K versus 336K a year ago.
So bigger customers, more of them. What does that mean for the overall revenue mix?
It means those $100K plus customers are a bigger slice of the pie. They now make up 58% of total AR.
Up from 56% last year.
Right. And you see the flip side, the really small customers, under $10K ARR, they're shrinking in the percentage, down to 6% from 8%. It's a clear strategic shift.
Makes sense. So focusing on large customers is one driver. What else helps them win and grow those accounts? Multi-product adoption seems big too.
Oh, definitely. They want customers using more and more of the Samsara platform, not just one thing.
They share stats on that.
Yeah, pretty compelling ones. Among those $100K plus customers, 95% use 2 or more Samsara products.
95%, wow.
And 66%, two-thirds are using 3 or more.
That really shows how integrated the platform can become once they land a customer.
Absolutely. The shareholder letter had a great example. Knife River,
Yeah.
large construction materials company.
Yeah, I saw that. What did they start with?
They started with video-based safety, telematics, and equipment monitoring. Kind of a core suite for that industry.
And the key was the results, right?
Exactly. Their pilot showed significant drops in safety events overall, and they specifically called out the AI coaching features.
For things like distracted driving and seatbelt use.
Yeah, they saw an immediate impact there. So you land with a few products, show that clear ROI, and that just opens the door to expand within the account.
Okay, so large customers, multi-product use. What about geography and industries?
Also contributing. International growth was strong. They said a record 18% of their net new ACV, annual contract value, came from outside the U.S. this quarter.
Any specific region.
They called out accelerated growth in Europe specifically.
And they operate across so many industries, right? Because physical operations are everywhere.
It's a massive market, yeah. Over 40% of global GDP, they say. Construction was actually their top vertical again.
Seventh quarter in a row.
Seventh straight quarter, yeah. And transportation was number 2, apparently showing its best growth in over 4 years.
So that broad reach across different industries helps insulate them a bit, gives them multiple avenues for growth.
Seems like a real strength.
Okay, so growth looks good. The drivers seem clear. But let's talk about the elephant in the room, the macro environment. Everyone's feeling some uncertainty. How did Samsara navigate that? What did the CFO, Dominic Phillips, say?
Well, he was pretty upfront about it, acknowledged the uncertain macro environment, and yeah, they did see some elongated sales cycle.
Meaning deals took longer to close?
Exactly. He even pointed to a specific period after Liberation Day in April, like as a holiday impact, where some customers seemed to pause and maybe prioritize spending on things hit by tariffs, like new vehicles, equipment, that sort of thing.
Okay, that's interesting detail. So some headwinds felt, but did they see things recover?
Yeah, he balanced that by saying transactions did close later in May, and importantly, they generated a record pipeline in Q1.
Okay, so future potential looks strong. And win rates.
He said win rates stayed consistent and healthy.
So why do they feel they can handle this environment? What makes them resilient?
They pointed to a few things.
Yeah.
First, their subscription model. Almost all their revenue, like 98%, is recurring.
Predictability, even if new sales slow a bit.
Right. Second, how they price. It's based on assets, trucks, trailers, equipment, not employee headcount.
Ah, so if a customer has layoffs or slows hiring, it doesn't directly hit their Samsara spend like per-user software might.
Exactly. Third, they're selling into operations budgets.
Not just the IT budget.
Right. These ops budgets are often larger, maybe less discretionary, because they cover core functions, keeping things running, keeping people safe.
And maybe the biggest point, that ROI we talked about.
Absolutely. Their products deliver tangible savings. Reducing accidents lowers insurance costs, better maintenance cuts, repair bills and downtime, fuel savings, better asset use.
These are real dollars companies can save, which is super appealing when budgets are tight. That fast payback is probably their best defense.
Seems like it. That clear value helps cut through the noise.
Okay, let's zoom in on some of those solutions delivering that ROI. Safer operations using AI, that seems like a massive focus area.
Huge focus. And you can see why. The sources mention NHTSA data, over 500,000 large truck accidents every year in the U.S. alone.
And the causes are things Samsara directly targets, right? Speeding, distraction, fatigue.
Exactly. And they did this survey over 1,500 commercial drivers. The results are pretty stark.
What did they find?
Like 78% said they'd had a near miss while distracted. 67% had experienced drowsiness behind the wheel.
Wow. That really highlights the need for tech to tackle things like phone use, eating, smoking while driving.
Yeah, and Samsara's AI is designed for that. In-cab alerts for those specific behaviors. Plus, they have new tools for managers like an intelligent safety inbox and AI insights to spot risk patterns and coach drivers more effectively.
You know what really caught my eye was the shift towards positive reinforcement, too.
Yes, that felt like a newer angle. It's not just about catching mistakes.
The survey found 95% of drivers agree coaching helps, but recognition matters, too. They cited research linking engagement to way fewer safety incidents.
Something like 48% fewer incidents. And recognized employees are much less likely to leave, 45% less likely.
So Samsara actually launched new tools for this.
Yeah, things like streaks and milestones for consistent safe driving, personalized kudos for specific good actions, and shared visibility so teams can celebrate wins.
That's smart. Building a positive safety culture, not just a punitive one.
Seems like the goal.
Yeah.
And they shared a case study, a big retail propane company.
Right. 3,000 vehicles, lots of employees. They expanded big into video-based safety.
And the pilot results were dramatic. 75% reduction in overall safety events,
75%.
87% reduction in drivers not wearing seatbelts, 71% drop in mobile phone use. Just huge improvements.
Yeah, and the customer credited the AI specifically.
Yep, they said the AI impact was the key differentiator. Those are the kinds of results that really sell the value.
Okay, safety is one big area. Another major one is asset health, basically, maintenance.
Yeah, another huge cost center. That ATRI data point, roughly 10% of an operations budget, goes just to repairs and maintenance.
And companies are trying to get smarter about it, right? Especially with supply chains, tariffs making new equipment maybe harder or more expensive to get.
Exactly. They want to make existing assets last longer, spend maintenance dollars wisely, and they're looking to AI to help predict problems before they happen. Proactive maintenance.
Makes sense. What are the big benefits if you get that right?
Well, less unplanned downtime, obviously. Your trucks are on the road making money, not in the shop.
Right.
Longer asset life, so you delay big capital expenses. Fewer safety risks from things like, tire blowouts or brake failures. Lower repair costs overall because you fix small things early. Even better fuel efficiency.
So how does Samsara help with that? What are their AI maintenance solutions doing?
They leverage this incredible amount of data they collect. Millions of assets, 80 billion miles tracked a year, covering almost all major U.S. roads, plus data from, like, 230 million digital inspections annually.
That's a massive data set.
It really is.
Yeah.
And they use AI on that data to provide insights. Things like predicting the severity of a fault code, identifying common repairs needed for certain types of equipment, suggesting the best timing for preventative maintenance.
And they make it actionable, not just insights, but
Right. They integrate it into workflows, like
Yeah.
creating work orders with the relevant asset data already pre-filled based on the AI insight. Makes it easier for technicians.
they had another case study here, right? Sterling Crane.
Yeah, big mobile crane rental company in Canada. They really transformed their maintenance using Samsara.
What were the results?
Pretty stunning. They cut unplanned maintenance way down, from 34% of their work to just 20%.
That's huge for keeping cranes available for rent.
Absolutely.
Mm.
And it saved them real money. Over $500,000 a year just in maintenance labor. That's like 10,000 technician hours.
Wow. Any impact on equipment costs?
Yes, over $3 million saved in equipment, maintenance, and replacement costs combined. Their VP of Ops basically said Samsara made them more efficient, improved equipment reliability, and that boosted their reputation with their own clients.
Another clear multi-million-dollar ROI story.
Yeah.
That's powerful. Okay, so they're innovating on their own platform, but they're also partnering up with OEMs, the original equipment manufacturers.
Yeah, this is a really important strategic pillar for them. The trend is clear. New vehicles, new equipment, they increasingly come with built-in connectivity right from the factory.
So Samsara's strategy is to tap into that directly.
Exactly. Integrate with the OEMs so customers don't need to install separate Samsara hardware on those new assets.
Makes sense. Simplifies things a lot, especially for companies with mixed fleets, some older assets, some brand new connected ones.
Gives them that single pane of glass view in Samsara, regardless of the asset's age or manufacturer.
Did they announce any new OEM partnerships this quarter?
They did, a few significant ones. First, Hyundai Translead, they make semi-trailers.
What's notable about that one?
It's Samsara's first OEM integration that directly supports video-based safety on the trailer itself. Hyundai's built-in 360-degree camera system integrates right into Samsara.
So better trailer security, safety, helps with claims, maybe even sends video to the truck's cab.
Yeah, all without adding extra cameras or wiring. Pretty slick.
Okay.
A broader deal with Stellantis. That's a huge automaker. Jeep, Ram, Fiat, Peugeot, many others.
Right. What's the integration there?
It's for telematics data, pulling vehicle data directly into Samsara via Stellantis' data arm, mobile sites. They expect this could eventually connect over 14 million Stellantis vehicles.
14 million, without needing Samsara hardware.
That's the potential scale, yeah. Huge simplification for fleets using Stellantis vehicles.
And one more, right? With Rivian.
Yep, the EV maker. This partnership focuses specifically on electric fleet management.
Makes sense as fleets electrify. What data does it bring in?
Key EV data points, GPS location, odometer, state of charge, battery health, charging info, all integrated in the main Samsara dashboard.
So again, that single view for managers, whether they're looking at a diesel truck or a Rivian van.
Exactly. These OEM deals look really key to their long-term strategy for seamless data integration.
Okay, let's shift gears a bit to the financials beyond just revenue. Profitability and cash flow. They highlighted some big improvements there too.
Yeah, this is definitely a positive point in the release. Let's look at the non-GAAP numbers, which they use to show ongoing operational performance.
Okay. Gross margin.
Non-GAAP gross margin hit a record high of 79%. That's up 2 percentage points from last year.
What's driving that improvement?
They said it was mainly leverage getting more efficient in customer support and managing their connected devices costs.
Okay, 2 points on gross margin is solid. But the operating margin jump was even bigger, right?
Much bigger. Non-GAAP operating margin reached 14%. That's up a full 12 points year over year.
12 points. Wow. Where did that improvement come from?
Pretty much across the board. Better efficiency in cost of goods sold, sales and marketing, R&D, G&A. Basically, as revenue grows, expenses aren't growing nearly as fast.
That's textbook operating leverage. Shows the business model is scaling efficiently.
Exactly. It's what investors love to see alongside strong growth. And that flowed through to cash flow, too.
Adjusted free cash flow margin.
That improved by 6 points, hitting 12% for the quarter. So better operating profits plus improvements in managing working capital.
So overall, a much healthier financial profile alongside that continued growth.
Yeah, the trend is definitely towards more efficient, profitable growth.
All right, let's wrap up with the outlook. What did management guide for Q2 and the full fiscal year 26?
Okay, for Q2, they're forecasting revenue between $371 million and $373 million.
Which is about what, 24% growth year over year?
Yeah, 24% growth, both reported and in constant
Oh.
currency. They expect non-GAAP operating margin around 9% for Q2 and non-GAAP earnings per share of 0.006, $2.07.
Any FX impact baked in there?
Yeah, about a $1 million headwind expected in Q2.
Okay, and the full year guidance, fiscal 26.
Full year revenue projected at $1.547 billion to $1.555 billion.
Growth rate for the year.
That works out to about 24% year-over-year growth, maybe 24-25% in constant currency. Full year non-GAAP operating margin guided to 13% and non-GAAP EPS between $0.39 and 41 cents.
So maybe growth moderates slightly from Q1's pace through the year, but still strong mid-20s growth and maintaining that double-digit operating margin.
Seems to be the plan. Management sounds confident they can deliver what they call durable and efficient growth. They keep pointing to the huge underserved market, that tangible ROI, and the fact they sell into those essential operations budgets.
Feels like a solid position, even with the macro uncertainty. And quickly, any upcoming events people should know about.
Yeah, they mentioned their Investor Day and their big customer conference, Samsara Beyond. Both are happening in San Diego in June 2025.
Probably hear more about the state of the industry and maybe see some new product announcements there.
Definitely something to watch if you follow the company closely.
Okay, so let's try and synthesize all this. What's the main takeaway from this Q1 deep dive on Samsara?
I think it paints a picture of really solid execution. Strong start to their fiscal year, fueled by winning larger deals and expanding internationally. That multi-product strategy seems to be working well.
And crucially, they're doing it while becoming much more profitable and generating more cash. That operating leverage story is getting clearer.
Yeah, the growth isn't coming at any cost. They're showing they can scale efficiently. And that core value proposition, using AI and data to solve really expensive, critical problems like safety and maintenance in the physical economy, that seems incredibly relevant right now.
It gives them resilience, that focus on tangible ROI.
Definitely. Which kind of leads to a final thought for you, the listener. We see how AI and data are making a difference in these established physical operations industries. It makes you wonder,
Yeah.
what other traditional sectors out there, maybe ones that seem less obvious, are really ripe for this kind of digital transformation? Where else could data-driven optimization unlock similar gains in safety and efficiency in the next few years?
That's a great question. Lots to think about there. Okay, that wraps up this deep dive. Thanks for joining us to unpack Samsara's results.